Well, good morning, good afternoon, good evening, everyone. Thanks for joining us here, wherever you are in the world as you watch this broadcast today. Welcome to our webinar titled Metals Market Intelligence, What Traders, Producers, and Consumers Need to Know. Our focus during today's session is going to be on the LME, the London Metal Exchange, and I'm excited to introduce to you our esteemed guest panelists today. I'm Matthew DeYoung, Senior Product Manager of Market Data at Barchart, and I'll be serving as the moderator and facilitator for today's discussion. Allow me to offer a brief introduction as we get started here and as more people arrive into the webinar today. I'll provide a quick context for our chat and then invite our panelists into the conversation. Joining me today are two industry experts who you'll meet momentarily, Mark Water, Global Head of Sales at Barchart, and Glenn Chalkley, Head of Technical Account Management at London Metal Exchange. I think you'll enjoy today's session. This is not a product demo, as you'll find on maybe some traditional webinars. We've designed this to be a live expert panel discussion. And so our plan, just to let you know what it is today, is to have an open conversation with experts who spend every day helping market participants navigate global metals markets. Now, as you know, over the last several years, the metals market industry has experienced tremendous change. Global supply chains continue to evolve. Geopolitical events definitely reshape markets overnight, and volatility has become more persistent. And the amount of market data available to traders, producers, consumers, and analysts has grown dramatically. You could say the theme of today's discussion is this simple. How do you get the full picture of the London Metal Exchange? Throughout today's discussion, we'll explore these three key ideas. First, we'll talk about market venues. The London Metal Exchange is unique in that price discovery occurs across multiple trading venues. Looking at only one venue could mean that you're missing an important part of overall market activity. Second, we'll talk about prompts unique to the LME. The professional market participants often analyze the entire forward curve to better understand supply, demand, spreads, and market structure. And then finally, we'll talk a bit about volume on today's webinar. Does the volume that you're currently analyzing, including all the trading venues, does it include all the trading venues? Does it include spreads? And what might you be missing if it doesn't? So these are just a few of the questions, but they're not just data questions. They're metals market intelligence questions. At least that's how we like to think about it. And one reason that we're excited to introduce our esteemed guest today on our panelists is that our webinar is from two organizations that have highly complementary perspectives. The LME sits right at the center of global markets marketplace with decades of experience, if not centuries, supporting price discovery, liquidity, and market transparency. Then Barchart works with financial institutions, producers, consumers, and technology firms around the world to help transform market data into practical and actionable market intelligence. So together, we hope to provide some strategic perspectives, some practical takeaways by the end of the webinar. Hopefully you can apply them in your own organization. So over the next 25 minutes, our goal is to keep the discussion conversational, practical, and experience-driven. We'll also reserve some time at the end of today's webinar for Q&A. With that, Glenn and Mark, thank you both for joining us here today. Before we dive into the discussion itself, I'd love to begin by asking each of you to just introduce yourself, give a little bit about your background, your unique perspective, and the unique perspective that each of your organizations bring. So Mark, I'll start with you. Can you just give the audience just a quick, brief introduction if they don't know you already and your role at Barchart?
Yeah, thanks a lot, Matt. So my name is Mark Water. I'm our global head of sales at Barchart, and I look over what could be best described as our data connectivity vertical. So my day-to-day basis for the last 19 years here at Barchart has been interacting with global market participants that are ingesting our normalized and historical data and then implementing it in trade flows, risk management, and other decision-making processes.
Great, thanks, Mark. And Glenn, I'd love for you to do the same. Can you just introduce yourself and talk a little bit about your role at the LME?
Yeah, sure. I'm Glenn Chalkley. I head up the technical account management team here, and that's responsible for onboarding new members, new clients, new independent software vendors, helping out with the market data vendors at the same time. Hey, I've been at the LME nearly 34 years now. Luckily, I joined straight from school, so I've still got a few years, hopefully, ahead of me. But I was responsible for helping launch the electronic trading platform LME Select in the year 2001, which was a great project, taking floor-based trading and putting it onto the screen. And I was the operations director for about 10 years, and then hence all the grey hairs. But then after that, I've been in more in sales, biz dev teams, and now head up this technical account management team.
Yeah, Glenn, I know both you and Mark have well-rounded experiences that you'll contribute today. So let's dive right in and kind of address this question. What makes today's London metal markets unique compared to, let's say, other commodity markets? And Mark, I'll start with you.
Yeah, I mean, it's an interesting question because when we started redoing our LME feed, our first step was to forget everything we know about a traditional futures market and futures market data. Because if you do that, you start to understand the LME itself. Because the LME is a forwards market. And that market is comprised of multiple different venues. So volume becomes an interest. There's cumulative volume, there's individual volume, there's this concept of open interest that doesn't always line up to volume. And and you really have to kind of disassociate the LME from your traditional futures exchange and say, this is a forwards market. It is unique in structure. Now let me begin to understand what that structure is.
Yeah, that's good, Mark. A good way to frame it up. And then, so Glenn, how would you respond to that question? What makes LME unique compared to other markets?
Yeah, Mark's right. We've got a lot of history, okay? We were formed back in 1877, and that was for the need for mining companies and consumers, to hedge their price risk. And Mark's correct. We are a forwards market and not a futures market. And in essence, what that means is we only pay profit on trades at settlement of the contracts that take place. So a quick example, if you was to buy the December copper contract now, and 10 minutes later you was to sell that December contract, and hopefully if you made a profit of $5, the LME keeps those positions open all the way until December, and then you realize the profit in December. The margin is offset, but the positions stay open until December. And obviously the other side of that forwards market is if the opposite of that example, you actually lose $5 buying and selling in December, we charge that variation margin the next day. So it's something that users need to be aware of when they're entering our market compared with other ones.
Yeah, that's good, Glenn. Thank you for addressing that straight away. And I think both of your points will frame up the rest of the questions, but especially this one. And I'll address both of you on this question, if you don't mind. What are the biggest trends that each of you are seeing across the global metal markets this year? In other words, are there changes in participant behavior or volatility or demand that stand out? And so, Glenn, I'll just kind of defer to you first. How would you answer that question?
Yeah, so probably again going back to some of the LME differences between other markets, and we think we're different, and we know to explain why we're different. And some of the things we do were set in 1877, and you may find they're crazy, some of the things we do today, but at least maybe after this session you'll know the history of why it's crazy, and it'll make a little bit of sense. So one of the things as well is when we talk about our delivery dates, what we call prompt dates, our term structure. We have a contract called the 3 months date. I think some of you may have heard. It's quite a big date for us. It's 3 calendar months from today. It's not the third month. It all stems from ships carrying copper from Chile back in 1877 back to London. They never took exactly 3 months. So our traders wanted to have a daily delivery system so they could match their contracts to when the ships actually docked. So we gave them that flexibility. One of the contracts you can trade with us is Tom, which is tomorrow, next business day. You have until 12:30 London time each day to trade for tomorrow. Now, I know Amazon have been doing next day delivery for a number of years. We've been doing it from nearly 1877, that you can get a contract for tomorrow. You can then print out a warrant, take it to the warehouse and get physical delivery tomorrow. We also then trade every single business day between the cash prompt, 2 days time, to 3 months forward. So it's every single business day. If you want copper delivered on the 6th of August or the 10th of September, you can get it on that exact date. We then have what we call monthly contracts, and these are the third Wednesday of the month, and they go from 3 months all the way out to 10 years. So users have the capability to hedge their price exposure all the way to 10 years forward. And what we've seen over the last couple of months and probably last year or so is a lot more demand and a lot more trading on our outright monthly contract, the third Wednesday contract, as we call it. We've seen growth of 115% year on year from the previous year. So as much as you have this 3 months contract, and you have all of these dailies and all of these third Wednesday monthlies out to 10 years, a lot of the focus is starting to gather on the third Wednesday, the monthly contract. And I'll just talk a little bit more, Matt, about how people trade monthly contracts today and how we can see it evolving going forward. A lot of time our users will trade that 3 months contract first, get a position, and then do a second trade to adjust that exposure, normally to a monthly contract, a third Wednesday. And we have probably about 65% of our open interest for each month sitting on that third Wednesday contract. So we know it's a focus point. And one of the things we'll talk about later on is looking at our market structure and trying to gain more liquidity on the screen, but also on those monthly contracts as we go through.
Glenn, that's really good. I think that right there was worth the time of attendance, the price of attendance, because it offers a very up close and it from the trenches perspective. You know, Mark, I'll kind of count on you for maybe that zoomed out perspective of trends. So what are you seeing in terms of big trends across global metal markets this year?
Yeah, from our side, what we're starting to see is a large increase in demand from participants outside your traditional trade houses. So for the LME, it was always their core customer base. As Glenn said, they're trading the tomorrow contract, they're taking a warrant, they're going to get delivery. That is the core customer base. There's traditional metals houses of the LME. But our demand has really been driven from outside that recently. And you're seeing outside participants begin to consume this data at a much higher rate. And as they start to do that, the actual education behind it, what Glenn was just explaining, that becomes so much more important because you're bringing people from outside the traditional participants and injecting them to a market that has a very different structure to deal with.
Yeah, I can vouch for that. I've seen the same thing. So those are good perspectives. These have kind of the high level, sort of outside the traditional experience, that perspective. And then Glenn, like you said, those stats that you shared are really, really helpful. So let's move on to this third question. When professional traders or industrial consumers begin their day, like what are the first market signals that they're paying attention to beyond price? I think we want to shift that conversation to beyond price. Glenn, how would you answer that?
Yeah, so obviously, like most exchanges, we publish a lot of market data reports each day to help our users get information on the markets and trying to help them around their understanding. We have the normal volume, open interest, intraday closing price, etc. But I wanted to highlight a couple which is maybe a bit more unique to LME that people may want to find out a bit more. So at 9 a.m. each day, we have a report where we list the stock levels in our approved warehouses throughout the world. We have over 460 approved warehouses. They're in 34 locations, mainly in areas of net consumption of metal. That's where it's being used more than it's being mined. And they're across Europe, Asia, and North America. And last year, our warehouses received 1.5 million tons in and 1.8 million tons went out. So it is a daily movement of metal that is happening. Now, the LME doesn't actually own the warehouses. Warehouse companies come to us to get approved. And as long as they abide by our rules on security, transport links, if they've got rail, road, your water access, those kind of things, and they report their stock levels on a daily basis to us. A second report that is quite widely used as well is our position and warrant report, which gives information on the LME's lending rules for dominant position holders. Where a participant was owning warrants, so they're owning metal, we also look at their TOM position, their cash position, and their first monthly third Wednesday contract. So we add the existing position plus TOM plus cash plus the first third Wednesday, and we compare that to that 9 a.m. London time LME stock figure. And if a participant has more than 50% of the stock, and if they're asked to, they need to sell back or lend back to the market at a set predetermined rate. So there's a couple of examples, Matt, of some of the reports that market participants may see on our exchange differently to others, as along with the full set that they would expect to see.
Glenn, I think that's really good. The depth of your answer hopefully is triggering maybe some people who already know your exchange very well, and they go, I needed that reminder. But maybe, Mark, as you said, there's some folks that are new attending the webinar to the LME, and so this probably was very, very eye-opening to hear that sequence that happens every day and how we can look beyond price when it comes to LME reporting. So let's switch to this next question and talk. I'm going to ask you, Mark, first. I know you work with firms across a lot of different industries. How has the way clients consume market data changed over the last few years? What would you say?
Yeah, I mean, if you're in this webinar, you've probably seen maybe one or two of the other ones that Matt and I have bet on, where we're kind of talking about a consistent theme that we've seen over the last few years. And that's the shift from looking at single symbols to consuming full venue or complete exchange data sets, and the rise of quantitative or algorithmic systems and quantitative analysis within firms that previously had never touched such advanced mathematics or large data sets, or had been storing massive amounts of cloud storage of data. So it's an overall shift that you've seen in the industry, and it's really begins to come to a head with something like this. Because here, when we redid our feed over a year ago at this point, we exposed all three LME venues in granular detail. And a lot of the times when people are trying to get that large data, that big data atmosphere to actually start attacking this data, getting that complete view across all three venues, the ring, the phone, electronic, you need that to get the complete volume numbers. So that has really been what has been generating a strong client interest. And we start to see that actually more and more, but there's a first hurdle to get past. And I think we'll talk about that first hurdle in a little bit, but it's being able to get all three of those venues, be able to get the complete total picture, being able to adjust it quickly. And then, although I will say, I don't think we have the complete history back to 1877.
Yeah, let's not make that promise. But Mark, you are bringing up a very important point that I hear also every day, which is a little bit of surprise at the level of detail and granularity that the LME offers. And like you said, we've had to sort through that at Barchart and have come out on the other side, I'm happy to say. So, Glenn, let me address this question with you first of all. What mistakes do you see organizations make when trying to understand the metals market, especially around the areas of risk? Did you have any feedback about that?
Yeah, it probably echoes a little bit what Mark was saying about the three different venues that we have, because again, it's understanding those venues and the volume that transacts across those venues. Back in 1877, traders used to meet in London in a coffee shop, and they drew a chalk circle on the floor, and they should stand around it, and they should trade by open outcry. No different to probably what you see over here in Chicago, but what was unique for the LME, what they decided to do back then, was to trade the metals in 5-minute trading bursts. So to concentrate liquidity into a short burst. We still have that today. In London, if you're ever in London, you want to come and see it, it'd be great for us to show you. It's active mainly between 12:30 and 1 o'clock each day. And each metal takes 5-minute trading turns in a one pit, and we call it the ring. So they'll trade copper only for 5 minutes, the copper traders get out, and next metal trades for 5 minutes, and so on for half an hour. So people have to be aware of that what is happening. We also have a telephone market, an inter-office ring around, you may call it over here. So we have the screen, the electronic, we have open outcry, and we have a telephone. And the volume is split about 49% on the telephone, 50% electronic on the screen, and probably 1% on the ring. But again, remembering that ring is going to be a little bit low because it's only 5 minutes a day. So it's not comparison with a whole day trading like you may have seen on other exchanges here. So yeah, it's all about making sure not only you see the data for the other venues, you understand what you're seeing and put it into context of what that venue is showing you, because it can be different to what you may have seen on other exchanges.
Yeah, that's really good, Glenn. Thanks for that answer. We've been encouraging people to follow that advice for quite some time now. And Mark, did you have any just sort of additional comments on this question?
Yeah, and I think I kind of alluded to it previously with saying that we'll touch on where those mistakes that we see are. Um, I think it's actually at that core part, like where Glenn's just explaining it, understanding the whole market and looking at more than just a portion of it. A lot of the firms that we deal with, when they are starting to investigate this, they may already have a feed, and we will show them our feed, and then the question will be, okay, why are these different now? And it becomes an actual education portion of, I mean, it's not even part of a sales cycle. It's you have to understand what you're looking at in order to properly evaluate it. So educating them on what they're missing. And like Glenn said, if you're trading the December, the open, even if the trade takes our side, closes out, the open interest is still there until December. Well, that's not standard. If you don't understand that, that open interest number will raise flags for you. And if you're only looking at something like, the third Wednesday or something, if you're only looking at the 3 month contract on the one venue, you're not going to see the total volume number. And you're actually going to be missing different things. You're going to be missing the multiple delivery points across the curve. So for us, the big mistake is not understanding what you're looking at ahead of evaluating the data. You can't properly test it. You can't properly run it through any sort of algorithmic or quantitative system. You cannot make a decision based on it if you don't actually know what you're looking at and you're only looking at maybe a third or 49%, or if you're only looking at the ring, I guess 1% of the picture.
I love how we're framing the look at the metals market and having intelligence around the market today, because Glenn, as you know, my favorite way to understand LME is to understand its origin story that you mentioned today, the ring, the shipping time, 3 months, and then all of a sudden things start to make more sense. And then we add to this the modern reporting where we can look at how the actual physical product is moving around the world through the warehouses. So this is, I think, really starting to frame in how to look at LME and have intelligence around the metals market. Let's move on to our sixth question. And Glenn, I'll address this with you. Looking ahead, what developments do you see in the metals market that market participants or analysts should be preparing for today?
Yeah, hey, we've got a very busy period we're in at the moment. We're actually modernizing our market structure, and we've got a program we're trying to attract more volume to the screen. We recently increased the month-to-month spread tick sizes from 1 cent to 25 cents. And we recently published a paper on how that has improved our markets on those spreads. We also increased telephone fees for clients who are trading on the telephone by roughly 20%. And we reduced the electronic fee for clients to, again, roughly 8%. So again, showing direction of where we want to go. On the 3rd of August, we are launching a new liquidity on order book program to increase depth on certain month-to-month spreads. And probably one of the biggest things we're actually doing on the 24th of August is we're introducing block thresholds. And this is quite a big new thing for LME, where if you want to trade below a block threshold, so a copper, for instance, that's 10 lots. So if you want to trade less than 10 lots from the 24th of August, you have to do it on the screen. Okay, you can't do it on the telephone, you have to do it on the screen. So we're hoping to see almost from an instant uptake of electronic from that date onwards, where we're seeing more volume go into that screen. In September, we're changing our options contract to be European style and automatically exercised on declaration day. And later in the year, we're looking to add options on screen as well. I know Barchart's one of their objectives, hopefully be ready for day one for that. So we appreciate you doing that, Mark. And we're also partnered with the Shanghai Futures Exchange to launch an LME Steel HRC Shanghai cash settled futures contract. A bit different to what we've been talking about. That is a bit more of a standardized market that most people probably know or understand. That's sometime in October. And on our trading platform, we went live with a new version last year, which has given us a lot more capability and capacity to do this. And we're adding self-execution prevention and also adding trade at settlement contracts, the TAS contracts. Today they're live on the 3 month date. We're adding them onto those monthly contracts. So an extremely busy second half of the year, Matthew, and probably going forward.
And I'm glad you mentioned that though, because maybe some of this webinar was for getting oriented. Maybe there's analysts, maybe there's quants, maybe there's data scientists, development teams that are on the call today, and they go, I really appreciate that education. But for those who are used to LME, this roadmap that you just shared, again, was worth, I think, bringing this webinar together today to sort of set expectation for the rest of the year and into, dare I say, 2027. It's hard to believe I'm already quoting that. But let's move on to this next question as well. If you could give one piece of advice to anybody who's buying or selling, hedging, maybe just analyzing the metals markets right now, what would it be? Glenn, I don't mind starting with you on this question again.
Yeah, and again, it's probably just repeating some of what we said before. Don't just look at the 3 months contract. Don't just look at the term structure. Look at the monthly contracts. Look at those market data reports we're putting out, because it does help give context to the market, and you can probably see some of the movements that's happening. So keep looking at everything we're pumping out, because it's extremely important to help give you that rounded LME knowledge of why prices are moving, and you can take that into your day-to-day decision making, I guess.
That's good. Mark, anything to add to that?
Yeah, Glenn, I mean, you're echoing what we see across other markets also. It's the idea that just the price data isn't enough anymore. It's you need so much more in terms of fundamental data, in terms of cash data, in terms of physical, to actually be able to get an overall picture of a market. And this can be metals, this can be energies, this can be ags, this could be financials. It doesn't matter at this point. It's having a number on a dashboard isn't enough. Having a single data series isn't enough. You need a holistic, complete picture of what's happening in the world, the global market. You need to understand everything ancillary around what is happening with that price to truly be able to analyze and make a proper decision within a market. It's really where the decision making, the risk management, the trading world has moved to at this point. We're able to compute more, we're able to bring more data in. You need to look at it. You don't know what you're not looking at, and that's impacting your end result.
Yeah, that's good, Mark. It's a good way to remind people like how to approach this. We're beginning to wind down the webinar. We're going to do Q&A in a second. I want to talk a little bit about next steps. Glenn, you mentioned something that I didn't catch before, but you probably already told me, which is you had recently done some research, or the LME had done some research and published a paper. I'd love to get that from you after the webinar and maybe provide that to the participants. I'm sure they'd be curious about it. But past that, any other next steps that you want to mention before we go to Q&A?
Yeah, hey, we know we're different to other exchanges, and when we're trying to attract users who are used to other exchanges, as Mark said earlier on, sometimes it's harder when you know other markets, and I'm trying to explain 3 months dates and delivery dates. I can see people's minds all whirring, trying to put it into the language they know at CME or ICE or whatever it may be. So sometimes it's good to don't be afraid to ask for education. Don't be afraid to reach out to me direct or your Barchart rep. Ask about the things we've talked about. contact me directly. We're always happy to do that. Obviously, our website, as you said, Matthew, we put that the paper on tick size changes we've recently made. But there's also lots of information about our modernisation program that we're embarking on, and all those dates that I reeled off earlier on. So it's all out there. Hopefully after this, some of your attendees won't find the LME as a scary prospect as they probably thought it was. And with that bit more knowledge and understanding, we'll look into trading these markets and using the market data that goes along with it.
Yeah, it's really good. Mark, what would you say in terms of next steps or anything practical you'd like to recommend from here?
In my mind, if you're currently ingesting LME data and any of these things you heard sounded new or foreign to you on this, I think you should probably take a look at where your data stack sits currently, because it sounds like you might be missing something. You know, if you don't have all venues, if you can't delineate between electronic, telephone, and ring, if you can't see cumulative volume versus individual venue volume, if you are finding yourself looking at open interest numbers and comparing them to other websites and saying, wow, this doesn't line up, it might be time to start taking a look at actually how you're ingesting this and how you're understanding it, and taking those steps that Glenn said, the education step of it, because understanding this market is going to be the first step in being successful in this market. And yeah, if anything sounded new or interesting to you or foreign, I think it's time to kind of look at how you're ingesting LME data.
Yeah, that's really good advice, Mark. Glenn, thank you so much. This has been great. I know we covered a lot of ground in a short time. Before we wrap up, we'd like to spend a few minutes, and we do have some time here to address a couple questions from the audience. So we've received a couple questions throughout the session. I'll do my best to direct them to the appropriate panelists, Glenn or Mark. So with that, let's transition to some audience Q&A. If you have any questions right now, you can post them to the GoToWebinar control panel. You can do that right now on that GoToWebinar control panel question box. If you don't mind, we'd love to hear from you. And rest assured, if we don't get to all your questions, we will follow up afterwards. So I'll just kind of monitor the queue here. And Mark and Glenn, let me sort this out. All right, first question. Glenn, I think this could be for you. You mentioned a lot of innovations during the webinar. So I think this is where this is coming from. LME is undertaking some modernization. So what innovations do you believe will have the greatest impact on the metals market over the next few years, let's say 1 or 2 years?
Yeah, I think that introduction of the block thresholds on the 24th of August, you will see a shift from a telephone market to the electronic. So we'll just see that increase as we go through the year and into next year. And the whole move to having options on screen as well is giving a direction of where the LME is going. So again, having the access and the visibility to the screen is an area where I see a big push that's going to happen in the next couple of years, definitely.
That's good. That's good. I think that people should pay attention to what you're talking about, Glenn. Like you said, you've had a 34-year history and hopefully many more days ahead. So we want to heed your advice on that. Mark, again, I know we're taking live Q&A here, so I hope this doesn't catch you off guard. But when it comes to like trading and risk, one of the questions that we got is how should firms think differently about metals price risk in today's environment? You might have mentioned it already, right? Which is to get the whole picture. That's been the really big theme. But anything else you would add to that? And I think reminding people what maybe a few points you already said is helpful here too. So how do you think they should think differently about managing metals market price
Yeah.
risk in today's environment?
I think it starts for us. In my mind, it's really going to start at understanding what you're currently seeing, and is what you're currently seeing enough. That's where I think you'll really start to get into it, because if you can't delineate the venues, if you can't see cumulative volume versus individual volume, if you have those issues with open interest, if you're not looking at the warehouse numbers, if you're not finding other fundamental or physical price data around the one price data price point you're looking at, that's going to really impact how you manage that risk. Understanding the market and understanding how to navigate it is still the largest thing for me. It's hard to be successful in something if you're not an expert in that thing. So
find a way to to get the education to be a little bit smarter about it, a little more educated about it, and get closer to being that expert, and lean on the resources you have available to achieve that. Whether it's your friendly LME rep like Glenn, or reaching out to someone like ourselves and just saying, hey, we've looked at this,
We don't completely understand it. What can we do? What can we do going forward?
So of course, Mark, we could never talk about who we talk to, but I can definitely say generically that there are people who reach out and ask that question. And I think that's impressive actually when teams and firms reach out and say, there's something I don't understand, because talk about edges, just being a domain expert is a beginning to an edge. And so you guys are giving very simple advice, right? It's simple on the surface, but actually it's a path to mastery and possibly a path to an edge or an insight that somebody's looking for. So please listen to what Mark and Glenn are saying. This is really good advice. So that kind of catches us up on the main questions for the webinar. And I want to just tell you, excellent questions, everybody. Glenn and Mark, thank you both for sharing your expertise today. And I want to thank everybody who attended the webinar and spent part of your day with us. If there's one takeaway from today's discussion, how I would frame it is that market intelligence is about much more than price when it comes to the metals. So the organizations that consistently make better decisions are probably the ones that understand the broader context, as you said, Mark, from inventories to liquidity to volatility, that clear, accurate, and full, what do you want to say, depth of open interest or breadth of open interest. The technologies, too, is a big part of how people are transforming data, consuming it, analyzing it, getting insight. So we hope today's conversation has given you a few practical ideas that you can take back to your own organization. And as a reminder, we'll be sending everybody a recording of today's webinar along with some follow-up materials, maybe a link to the research that Glenn mentioned earlier. And if you'd like to continue the conversation or to learn more about how Barchart delivers comprehensive London Metal Exchange market data across all the venues, every prompt, you can go to barchart.com/solutions or reach out to our team. Mark has offered his advice, Glenn the same. So we'd be happy to schedule a little working session with you and look at your metal data market needs and workflows that you're building. We can talk about all of it. So on behalf of Barchart and the London Metal Exchange, thank you again for joining us today. Have a wonderful rest of your day, everybody.